Hello everyone, my name is Max Kruszeski. Today I will be pitching domestic IT stock Domo Inc., ticker DOMO, currently trading at $44.50 as of February 28th, with a target price of $95.01, representing a 113.51% upside. I'm sure we're all familiar with the structure of these presentations, but for clarity, Section 1 will cover a company overview, Section 2 will be my recommendation, Section 3 will be analysis of the drivers, Section 4 will be my valuation, Section 5 will be the risks of Domo Inc., and Section 6 will cover management. Domo Inc. is a provider of a cloud-based platform that allows access to real-time data and insights and enables users to manage their businesses from their smartphones. The company operates through two segments, the subscription-based segment, which represents 87.4% of revenue, and the professional services and other segment, which represents 12.6% of revenue. The subscription segment gives customers access to Domo's business cloud, empowering organizations of all sizes with business intelligence leverage at cloud scale and record time. With Domo, business intelligence critical processes that took weeks, months, or more can now be done on the fly in minutes or seconds at unbelievable scale. Data from across the business is collected, stored, prepared, organized, analyzed, visualized, and shared. Domo's cloud offers business analytics and other operational insights pulling from a range of sources into one platform. The professional services and other segment focuses on customer assistance and implementation and maintenance of the platform. Domo currently earns 75.9% of its revenue in the United States, 10.5% in Japan, 3.4% in China, and the rest spread across other Eastern European countries. The company was founded in 2010 and is headquartered in America Fork, Utah. With the societal shift toward a more technologically based lifestyle and the COVID-19 pandemic, there is more data now than ever before. In 2021, the world's data usage was approximately 79 zettabytes in 2021. To put this in perspective, a typical smartphone has anywhere from 128 to 256 gigabytes of data storage. 1 zettabyte is equivalent to 1 trillion gigabytes. Because of this, it is now more important than ever for companies to utilize massive amounts of data. Companies everywhere are making the switch to business intelligent, machine learning capable cloud platforms that allow them to gain valuable insights on their customers and markets. With the tremendous tailwinds in the cloud technology sector and Domo's cloud offering customizable, flexible, and groundbreaking insights, Domo has posted a 22.94% increase in year-over-year growth in new customer billings. Domo's cloud platform serves as its own data lake, warehouse, and host, but also provides the flexibility of companies to integrate their own lakes or hosts. Billings are a critical piece to Domo's success. The company's billings include sales to new customers plus subscription renewals and upsells to existing customers, as well as amounts invoiced for subscription, support, and professional services. Domo's ability to attract new customers is a key driver for the company's top-line success. From 2019 to 2020, Domo posted a 22.94 year-over-year growth in new billings. Domo executives also provided a fiscal 2025 billings growth estimate of $500 million, implying a 21% CAGR through 2025. Domo also expects growth from its partners, with 5% of current reoccurring revenue coming from its partner contributions. Management expects this to increase to 15% by the end of fiscal 2025. Domo Inc. is heavily investing into their sales and marketing departments, including new hiring, stronger training, and proof of concept visits. While in the short term, SG&A expense is large, their investment in these fields proves to improve margins and demonstrates a large driver for Domo's future success. The firm is already seeing these investments pay off, with an increase from $800,000 to $900,000 in annual contract value per sales rep from 2020 to 2021. Domo was also shifting toward reeling in the enterprise market and attracting larger, more long-term focused customers. Management expects to increase their enterprise customer count, who are companies whose revenues are over 100 million, to increase to 50 by the end of fiscal 2025. As the training and new hires come to a close, as well as the proof of concept demonstrations, Domo's SG&A expense will decrease dramatically, improving margins while also having the ability to acquire and retain more large-scale customers. To reach an intrinsic value for Domo Inc., a 10-year DCF model was created. Using a terminal growth rate of 2% and a WACC of 8.91%, an intrinsic value of $92.01 was reached. A sensitivity analysis of the terminal growth rate and WACC of 100 basis points ranged from $68.24 to $117.07. Additionally, an EV to sales multiple valuation was calculated using a weighted average peer multiple of 13.62, resulting in a relative value of $87.79. Finally, a price to billings multiple valuation was calculated using the 2020 change in year-over-year billings. A weighted average price to billings multiple of 56.48 was reached, resulting in a relative value of $222.73. By weighing these models 60, 37, and 3, a price target of $94.37 was reached, representing a 114.48% upside. One of the risks present to Domo Inc. is that revenue growth depends on new customers. Domo Inc.'s top-line revenue growth is dependent on the acquisition of new customers to their subscription-based segment. Failure to grow Domo's customer base will result in flattening revenue growth. The second risk is their sales and marketing investment. Domo has posted losses in millions of 154.3, 125.7, and 84.6 for the years ended January 31st, 2019, 2020, and 2021, respectively, due to their new hirings and trainings of the sales and marketing teams. If Domo's plan to improve sales efficiency fails, their margins will remain weak and they may still be unprofitable. Domo's third risk is its reliance upon third parties. Domo relies on data centers, technology systems, and electronic networks supplied by third parties. Interruptions, breaches, or performance problems of these systems could adversely affect Domo's operating results. Josh James is the CEO of Domo Inc. Prior to founding the business in 2010, he was the co-founder and CEO of Omniture, which was founded in 1996, went public in 2006, and served as the youngest CEO of a publicly traded company from 2006 to 2009, before the company was acquired by Adobe. Josh James is also the founder of CEO.com. The CFO of Domo Inc. is Bruce Felt, who joined the team in 2014. Prior to this, he served as CFO of 4 other tech companies and founded Renaissance Software, where he served as CFO and head of sales.